Hey guys, how you doing? Welcome to the final free episode of Backtest Fridays. Moving forward, I'll be making it a subscription-based service when I launch my website. It's going to be probably $40 a month, so it's basically $10 a video. But when I launch the website, I'll have more information as it relates to that. I'll probably post it on my Instagram. But episode 11, I decided to do something a bit different as it relates to how the market actually works. So there's multiple ways you can view the forex market. You can view it from a technical standpoint and you can view it from a fundamental standpoint. My personal belief is that the charts will show you what is going to happen before it happens, right? The technical setups will be there before the major events happen. So this episode, I'm going to correlate a lot of the fundamental effects on the market and with the technical effects, basically. So like, let's start with euro. So a technical breakdown of euro is that we were consolidating along this region with also some sell indicators along right here. It had a trend line pushing to the downside. Could have gotten some nice sells along this region, right? That's the first thing. But from a daily perspective, this area also lines up with the daily past support acting as future resistance, right? Now, this big spike down and huge spike up, let's talk about that for a second because this is greedy. This is banks being greedy, to be honest. So the first thing is that this spike down was not supposed to happen. Like, it was not supposed to happen. So let's analyze on the 5 minutes what really happened. So this right here, this long wick to the upside, let's explain that long wick right here. Right, so monetary policy. If you're a trader, you need to know about monetary policies. So as it relates to the European Union, they decide that they're going to cut their interest rates from 0% to negative 0.50%. Now, when interest rates go down, that means investors have less money to pay back on borrowed money. So this is basically cheap money, and cheap money is an attractive investment. Okay? Now, when they decided that they're going to cut their rates, this was the effect on the market. Price shot up, which is what is supposed to happen. But banks were like, okay, nah, we ain't allowing that. So they took all of these buy orders and just forced price all the way down here, right? But like, it was dropped into a demand region. If you go on the H4, you'll see a hell of a demand region along this area. Where is it? There we go. So all of this indicated demand, right? So if you lost a trade along this region, then so be it. But when price came to demand, you should have been able to capitalize on the rejection of this demand down here. Probably a little break and retest. Let's see if I see any. Well, they had one right here. They had a one further down here also. But that was the result that actually was supposed to happen when the interest rate decision came out. Price should have shot up, but instead they drove price down into this demand region, this liquidity region. I always tell people liquidity is the ease of buying and selling of large sums of money at a specific time. So it's easier for a bank to offload 100, 200 billion dollars in this region versus this region. So that's why they do things like that, right? So that's one trade we could have capitalized on last week. We could have capitalized on the sell, because even if you were in sells along this region, if you got an ideal entry and gave yourself 30 pips, you would not have gotten stopped out by the spike up. So you'd be able to capitalize on a good 90 pips, about 100 pips along this region. If you were able to snipe the buy off this demand level, you would have been able to capitalize on at least 142 pips to the upside. And if you are trading based off of the fact that price cannot close above this region, you'd be able to be in this sell right now. I'm actually in this sell for about 70 something pips. Yeah, I wish I caught this buy though. I was preoccupied, but I got this sell and I'm in this sell also. So moving forward, we're going to talk about gold next. Now, one of the main driving forces behind gold is the US-China trade war, right? So let's take note of this area right here. This is the highest price gold was able to get to while the trade war was going on. Well, it's still going on, but while they're escalating tensions between the trade war, 1555.524 was the highest price it could have got to. The market consolidated for a little while, but there was a decision that was made on this day, the 5th of September. And if you actually Google the information about the trade war with China, if you look at the 5th of September, US and China agreed to new rounds of trade talks following their following sets where they did kind of fall out and decide, say, okay, we're not making any progress, we're going to leave. So on the 5th of September, when they made the decision that, okay, we're going to try to work things out, look what happened with price. On the 5th of September, price absolutely fell out of the sky, right? Technical entries could have been a break of this level of support acting as new level of resistance along right here. Or it could have just sold from the extreme highs because there's ways how to get into sales up here, right? So also take note of this information. US and China to hold talks this Friday. So that may be another catalyst for a big move in a certain direction. But from a technical standpoint, my standpoint is that it has not been able to break this area of demand. I think it was about 2 episodes back when I was in Cali, when people were selling right here. A lot of people sold right here and the demand was just building up down here. When retail traders or people that are not trading the right way were selling all along this region, they're just providing people with further orders to push the market along. So yeah, this level is still standing, so you have to take this into consideration. All right, US oil. Now, like, US oil has been crazy. We're not even going to talk about this yet. We're going to talk about over here. So for now, we're going to talk about this side right here. So let's change colors. Let's change this to chill. Bye. Oopsie. Yeah, there we go. So all along this highlighted region right here was basically, on a technical standpoint, you could see demand along this region. But from a fundamental standpoint, you had OPEC production cuts. Now, OPEC is a group of countries that produce oil. Let me check what's the exact meaning for OPEC again. Yeah, Organization of Petroleum Exporting Countries, right? So within this organization, they provide a lot of the oil in the world. And one of the decisions was that OPEC members, Iran, Nigeria, agreed to cut oil production. Simple supply and demand. If there is less oil available in the market, the price will go up. Cool? One thing. Second thing now, let's talk about the other box right here. So the other box right here is this airstrike, Saudi Arabian oil attack. Saudi Arabia is one of the largest oil producing nations out there, and Iran attacked their oil fields, right? When Iran attacked their oil fields, due to the cuts that were already being made in the market, and then a major strike to their their oil fields, meaning even more oil is not going to be available, that just drives the price up. That's why we had this heavy gap to the upside along right here. To capitalize on this, honestly, if you weren't in oil before, you won't be able to, because this is just a random event. But the fact, when markets open, you basically had all of this as a break, a nice retest of this area right here. You had past support acting as future resistance, and you'd be able to be in oil for about 323 pips right now. And it's going to continue going to the outside because this is a global event right here. This airstrike is not going to be good for oil producing countries because they're going to have to protect their oil fields, which means people that rely heavily on oil also have to protect their oil interests. And there's just going to be a situation where it just creates uncertainty. So people are just going to buy a lot of oil now and sit down on it because they don't know that tomorrow you're going to have another strike, and then it just causes price to keep on going up and not going to resolve itself for now. When we relate oil and the Canadian dollar also, Canada is one of the largest exporters of oil in the world to the United States. right? They're one of the largest producers and exporters of oil to the United States. So when I spoke about the OPEC production cuts, that shows that there's going to be a demand in the price of oil, which also leads to a demand an increase in the price of the Canadian dollar, right? When the Canadian dollar goes up, oil also goes up. When Canadian dollar goes down, oil also goes down. Canadian dollar was actually in a demand region when that happened too, so it's actually shot to the upside also. It's funny because there's like this very popular trader on Instagram that was just dropping so many sells along this region. He was just selling all along right here. Damn, he probably lost a couple mil on that trade. Next, GBP. Now, GBP is in a particularly interesting situation as the 31st of October is hard Brexit. They have to leave the European Union on the 31st with no deal, which means a hard border with Ireland. I don't know if a lot of people focus on history, but just Google like the history of England and Ireland hard border. It was like a lot of people, a lot of killings on all of those things way back in the day. They're not going to have any form of deal as it relates to trade with the EU. They're not going to have a form of deal as it relates to immigration, movement of people between Europe and the United Kingdom. That means a lot of big institutions that are based in London, they don't know the future of their employees. It's funny because when I was in New York, I was talking to a lady that lives in England. She's back and forth between New York and England. And she told me that there are people right now in England that are like stockpiling grocery as they don't know, stockpiling groceries, stockpiling what's it called, medicine and all things like that because they don't know what's going to be the outcome of their economy after the 31st of October. That's like a very scary situation. Imagine where you live right now. You go to the supermarket, you can buy anything that's available, and then one day after, you go to the supermarket, and then something that costs $1 costs $6. That's crazy. So on the 31st of October is the day when United Kingdom leaves the EU. If they go out without a deal, listen to me, GBP will absolutely melt out of the sky. And looking from a technical standpoint, look at this big move that happened right here. I spoke about impulse moves in our episode back. Go back and look at that. Look at that impulse move. You may have a continuation of this impulse to the downside actually. So that's pretty much it for this episode of Backtest Fridays. Just me me making sense of some of the fundamental things that happen in the market and try to align them with the technical setups that I see. So big up on yourself. Hope everybody have a wonderful trading week. All right. Bye-bye.